Everybody, it's Michael Martin. Happy Thursday. So this was a big thing for me, and that was learning how to time block effectively. It's one thing to keep a list of your to-dos, which are different from goals. And then how do you place them throughout the day, knowing that you do have to pay some attention to the markets, if nothing less than entering your orders, right? And seeing if they get filled, and if they get filled, where do you put your protective stops? And or for those of you who add to your winners because you don't buy your optimum position size at the beginning, how are you going to scale in and at what levels, right? So I had all that worked out. Then over studying that for months and months and months, I was able to isolate what was it that I did in my behavior, in my preparation, that required a higher weighting. In other words, what was much more material in my behavior that led to my trading success, rather than looking at things that might have felt good, right? And so what I found was that there was a lot of, I had macros written out on Lotus 123, which was the prevailing spreadsheet of the day. Trading simulators really didn't exist. And the whole cottage industry of coders and this and that didn't exist either. So what I learned was that I was super sharp in the morning. I was like an early morning, late evening type of a person. But the late evening part became problematic because it was in and around time where I should be going to bed. And what I found was, in studying my own behavior, that when I was looking at computer screens after 10 o'clock at night, and we'll talk to Ganja about this, it does something to your energy, and it actually makes you more awake. At least it did for me. And so I had a tough time winding down if I was doing a lot of market-related stuff the night before. Late night before, right? So I would do my preparation, usually after dinner. I wasn't much of a TV guy. I was in New York. I'd go to a lot of events, that's for sure, because I was into the arts and New York culture. And that could mean everything from, Broadway plays to off Broadway stuff. That was fun. I had family members in the entertainment business. So we saw a lot of musicals, a lot of shows, saw a lot of, Ranger games at Madison Square Garden, saw a million concerts there. Radio City Music Hall. Then there was obviously taking out clients to relationship build and bond and all that kind of stuff. So you were out a lot. And what I would do is, if I met those folks after work, is I would come home and I would get my preparation done, immediately. Now, the good thing is that if you're looking at certain markets and you know how you buy stuff, or if you're looking at a certain, looking for a certain pattern, one little look at the chart, you can kind of see, are you even in the neighborhood, or is that instrument even in the neighborhood of where you want to be? So a lot of times you're just scrolling through stuff, and it needs, charts would need weeks or months actually to develop. So there were a lot of the ones that I didn't have to look at until the weekend, because I knew during the week that the charts were a disaster, for example, right? So then I would focus on, okay, what happened with the things that I am looking at? Because then even the smaller portion of that are the ones that you're actually entering orders on, right? So there might be, say, 12 names on your to-do list. You might have 3 or 4 orders in. The other ones are still kind of close, but they're not right there yet, right? They're not at the price that they need to get to. The pattern might need more time to develop. So those are kind of close, and you have your eye on them, but they don't warrant putting an order in yet. And then there's everything else, which is the majority of the securities, right? So that goes for, like, at the time, there was probably 60 traded commodities around the world. Obviously, there were tens of thousands of stocks around the world. But in terms of liquid commodity futures, say there's 5 dozen, there might be 1 dozen on my list. And even of that, there might be only 3 or 4 names where you're actually putting in an order, for example, for a directional trade. So I would just kind of have to review stuff, because if you look at the same things every day, if someone said, okay, where's May Sugar trading? You kind of know where it is, because you're looking at it every day. Not necessarily in real time, but from looking at the chart and where you're putting in your orders, right? Then for the other names, like say you had 12 names on your wish list and you have 4 of them, you have orders on the floor, there's another 8. Maybe with those, you're going to put in alerts and say, okay, well, alert me when it gets to this neighborhood. So now I'm going to rely on the technology so I don't have to use all my brain power. But here's the thing. I would double check my work in early morning for making sure that I didn't have any errors. Because if I read in the wrong order, right, and they execute it, there's no problem with the execution. They executed it the way I told them to, right? So that's on me. If I enter it on the screen and I fat finger something, that's also on me. So I wanted to make sure for the orders that I was entering on the phone executions, that I had all the math right. And I'd still make mistakes. What was the biggest one? So in futures, they have this thing called first notice. Now, unlike options where the owner of the option has control, right, especially when you think of it from the standpoint of being able to execute, there is no necessarily execution in commodity futures. Bulls want things to go up, bears want things to go down, but you also have this unique aspect of commodity futures that you don't really see in stocks so much unless, of course, you introduce, say, pairs trading or options, and that's hedging. And so you can buy hedge and you can sell hedge. Selling hedges work when you're in the production of a physical commodity, right? You grow soybeans, so you're long the physical. So to hedge, you're going to sell futures. If you make tofu, or if you crush beans and make, vegetable oil, sometimes there's certain vegetable oils that are 100% soybean oil. Right, so you get the soybeans, you crush them, you bake bean meal, 45% protein, and you get soybean oil, which can be used in foods and salad dressings and this and that. And so when let me just regather my thoughts here. You would look at, if someone sold futures, it's because they were long the physical. Now, I'm long futures because I want to make money as a bull, but there's someone who's long the physical that's actually selling the futures to me because they're hedging. Maybe they think the price levels are right where they're supposed to be. And at that point in time, you have to be concerned with the thing on the futures contracts calendar called first notice. And that brings into sharp relief the time when the shorts can deliver against the longs. So in futures, again, it's the short seller who actually has the power in terms of delivery, whereas in the options space, the people who buy the puts and calls can exercise them. In futures, it's the short sellers, especially those who are hedging, that can deliver the physical to the long. And I would never commit to memory what that date was, because you would figure like, here's expiration, and you would count backwards. Now it's all available on the internet. You click the button and you can see it. But back in those days, the information wasn't so proliferated around the system to know that stuff. The CBOT website didn't exist, so it was harder to get that information. So I would be aware of like, where was the volume, where's the open interest for sure. And that kind of helped me stay clean for most of the time. But I can't tell you, it was probably half a dozen times a year, again, over hundreds or maybe thousands of trades. 6 times a year it would happen that I'd call in an order. Gerard would say, okay, just so you know, say it's a Thursday. Okay, Mike, I'll put the order in, but just so you know, in case you didn't know, first notice is like Tuesday, Wednesday next week or something like that. And I'd be like, damn. So he'd say, do you want to still put in that order? And I'd be like, okay, let's cancel that order and I'll go look at the next expiration. Sometimes it was May. If it was the May K contract, the next month is not always June. It depends on the commodity. It might be July. So I'd look at the next commodity chart, the expiration month. Sometimes the trade signal wasn't there. So that would happen a lot. Well, it would happen enough that I wanted to study and learn what that stuff is. The good news is that the technology kind of caught up and populated everything, so I kind of knew where I would want to start unwinding trades or not even put them on because of this thing called first notice. But what's going on behind the scenes for me with all of this is the main takeaway for today is like not to study first notice. Who cares? It's that the most important stuff in your day, you should do first in the morning. That's how you would prioritize. talk a little bit about intention equals results and time blocking. And in the time blocking space, you want to make sure that you are, in fact, putting the most important things that you should be doing for yourself in the earliest part of your day. Because you always want to make sure you can get done the most important things. As days go on and as time transpires throughout the day, you might have something happen to you in your business or in your personal life that throws a wrench in things and precludes your being able to do what you want to do. And if on your schedule you had these really important things to do, it can create a big conflict, and that could impact your life. It could impact your trading. Obviously, force majeure and random events happen. You can't escape them. They're going to happen to everybody. But that's why I feel like first thing in the morning, what do? It's largely exercise. That's when I typically go do my cardio. Because it's important to me and I want to get it in. Yes, I know, you probably know by now that I study martial arts, but that's largely anaerobic, right? It's mostly position. It's not even about muscle you need some athleticism, but you need good technique is what you need. So I don't need, yes, you need grapplers cardio for sure. But anyway, so I do my own cardio in the morning and then I'll do my review. Obviously, this is very early because I'm in LA. Just review my orders to make sure there's no typos, or again, I haven't screwed up the first notice thing or this and that, and I do the review because then it doesn't cascade, right? And because that's the most important part of the trading is the risk management, is knowing and double checking the position sizes, which I largely do on like a spreadsheet, or through the simulator. But then you want to just double check your math to make sure that you absolutely have stuff nailed down. So if you're struggling with things, maybe what you can do then is isolate the things that you do during the day that you know or you can attribute your success to, and make sure that those are happening earlier in the day than later. Please like and subscribe to the show, folks. I appreciate you being here. Keep the comments coming, and I'll see you tomorrow. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.